Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live at sktrading.live or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
You want to talk about wildness? Wow, it was wild today. First of all, we got the big push down early in the morning, and the markets rebounded like I expected, right off the 30-minute MACDs that were positive on the spiders and the Qs. S&P futures and NASDAQ futures, just like Friday, ripped from the buy divergences, pushed way up. And then we saw the big sell divergences on the 30 and 60-minute time frame on the index futures. Again, almost identical same pattern from Friday. And the NASDAQ futures were trading to 25,250. And oh boy, did they get absolutely kabooshed. Kabooshed. Absolutely kabooshed. Then we got another push down around the 11:30 to a new low and ricocheted all the way up on the S&Ps, but to a lower high. And then, boom. That was it. They got kabooshed. And then the 30 minutes reverse to sell. Then at 150, the 30 minutes reverse sell on the underlying ETFs, the spiders and the Qs. All right, now you're going into a negative trend. And what do you look to do? You short the first bounce on the 5-minute time frame at 150. S&Ps were trading 67.36. Got absolutely slaughtered, down about 60 points. NASDAQ futures dropped about 200. Unbelievable patterns I can't wait to show you today. Gold had a magnificent pattern off the 15 and 30-minute time frame. Gold was trading around the 41.64, and gold dropped. That's right, gold dropped 57 points off of that. Unbelievable pattern off the 15 and the 30-minute time frame. Bitcoin, that over 3,000, below 92,000. The 30-minute time frame reverses to sell, and you short the first bounce on the 15, but the push up to 95,500 on Bitcoin into the negative MACD. What a monster short. There's so many great patterns here today. We had today Apple reversing to sell on the 60-minute, correlating with the 30 and the 15. Every bounce on Apple on the 15-minute time frame was a short. We saw NVIDIA, all the shorts really set up on the 15-minute time frame at 12:15. We have Netflix today reversing for the first time, 10 for 1. Netflix, unbelievable, only down 57 cents, but the volume on Netflix, tremendous, great trading stock. Coinbase, unbelievable short in Coinbase around the 12:15. The 12:15 time period really set up the shorts on the Russell, Coinbase, the NASDAQ, the Qs. The whole world was a short at 12:15. But let's just take it one step back and let's just go over everything nice and slowly here. Okay? All right. First of all, let me just going to show you Bitcoin here. So I wanted to show you the pattern on Bitcoin, looking at the 30-minute and the 15-minute, well, with the 30 here and the 15. You can see Bitcoin reversing to sell right here on the 30-minute time frame at 9 a.m. Now, when Bitcoin pushed up at 9 a.m., it correlated with the 15 and the 60. But then when you got the push up here at 10 o'clock, look what Bitcoin did. You pushed up to 95,950, and the MACDs are negative on the 30-minute time frame. Also, you're pushing up here at 9:30, and you can see even here 9:45. Well, 9:30, 10 o'clock on the bar. The MACD is non-confirming on the 15-minute time frame. And then when Bitcoin reverses to sell on the 15, what's called a double red short now you're in a negative trend. The 15, the 30, and the 60-minute time frames are all in sell mode, right? Okay, what do you see here? The first bounce on Bitcoin on the 15, 94,300. Bitcoin never looked back. These strategies are very, very powerful. Very powerful. When you see a negative MACD like that in Bitcoin or any asset on the 15 and the 30-minute time frame, and you're pushing up into negative MACDs on the new high on the price, and the MACDs are non-confirming, and plus you're pushing up into a negative MACD, blue over yellow, absolute, what a monster sell divergence. Now in that that was a monster sell divergence and a sell disconnect because the 15-minute time frames were bullish, the 30 and the 60s were negative. Remember, 2 out of 3. Okay, and then you saw the bounce on the 15-minute time frame reversed to sell. It then correlated with the 30 and 60. And then you look to short the first bounce right here on the 15-minute time frame. This is a monster pattern. Again, the 15 reverses to sell right here. You can see right here on the push down. This is the after the opening. And then what do you look to do? You short the first. Here's the 15 correlating with the 30 and the 60. And here's the bounce on the 15. And a drop of about 3,000 points. Unbelievable pattern. Gold today, if you look at gold, really, really great. The 15-minute time frames reversed to sell on gold, and it correlated with the 30 and the 60-minute time frames. What do you look to do? You short the first bounce on the 15-minute time frame. Okay, you can see the bounce here, even on the 30. You can see here at 12, 12:30, 12:45, 1 o'clock. You can see the bounce here on the gold. Gold got absolutely kabooshed. And then I want to show you a really great strategy here. But now also, when this happened here, the gold futures were also reversed to sell on the 30-minute time frame, on the 15 and the 30-minute time frame. So when gold reversed to sell on the 15-minute, it also correlated with its underlying ETF, and it's also correlated with its 30 and 60. So this was a really phenomenal short here on gold. And then if you want to see what gold did here at the end of the day, this bearish pattern right here, this is a double red short, which means that the 5-minute time frame reversed to sell on indicator 4, and it correlated with the 15, 30, and 60-minute time frame. And then I was calling this short here above 64. Now, there's no way in hell I'm going to tell you that I thought that the drop was going to be about 60 points or 50, 55, 57 points. But I knew the drop was going to be very heavy. So gold went from 66.5 all the way down, look at this, almost 60 points. Okay, in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars, normally 8 bars. But the thing is, bottom line is, it was the pattern. The pattern was, this is the first bounce on the 5-minute time frame into the negative MACD after the 5 reversed to sell. And it correlated not only with the underlying ETF, the GLDs on the 5, 15, 30, and 60, but it also correlated with the 15, 30, and 60-minute time frames on the gold futures. Let's look at the Qs today. I'll show you the pullbacks here on the 30-minute. This is the first pullback right out of the gate. Ding, ding, ding. We caught this long. Again, you're making new lows. The MACDs could not confirm. Then they pushed up, which I'll show you the short. Here's the other push down here to new lows at around 11:30, and they pushed up to a lower high. And then I'll show you here. You can see once the 15s reverse to sell here again. You can see the 15s reverse to sell here at 11:15. I knew that there was an 85% chance that the highs were in. And then once the 30s reverse to sell right here, you can see that 2 o'clock, well, now you're in a severe negative trend, and you look to short bounces on the 5 and the 15-minute time frame. So caught this long here, caught this long here, another long here, because again, when you're making new lows here and the MACDs could not confirm on the 30-minute time frames, not once, twice, but 3 times on the deep oversold condition here. But now I'm going to show you the S&Ps and NASDAQ futures on the inverse, on the 30 and the 60-minute time frames, which gave me the ability to call the shorts on the highs for the day. This is exactly what happened on Friday. You can see here the push up right here, right after the opening, they exploded from 26.5 up to 74.75 on the S&P. NASDAQ ran about almost 250, 280 points. But where the hell are they going? Okay, they're pushing up here, and I'm jumping up and down like a baboon, and I'm telling people where the hell are they going? And they pushed up into a negative MACD here on the 30, non-confirmation. The highs are making, and the MACDs can't confirm, but also Looking at the push up here on the 60-minute time frame, the push up into the negative MACD, all right, and then they got absolutely kabooshed. And then what do you look to do? You short the first bounce here after everything reverses on the 15-minute time frame, and that's exactly what happened right here around 12:15. The whole world was a short. Now, S&Ps were trading 67, 66, 67. I said this market would break, and they actually did. If you look here at Coinbase, you can see everything lined up here at 12:15. Boom, here's 12:15, 12:30. Again, when you see a push up like this, and you have the ADXs rising on the 30, the 60, and the 15-minute time frame, and you're getting overbought into that negative MACD, well, guess what? Look out below. Coinbase dropped over 10 points on this. Let me see. Is that right? Let me see. Coinbase, 69. Yep, Coinbase dropped 1, 2, 3, 4, 5, 6, 7, 8. Not bad. Coinbase dropped from the high about 8, 9 points there. Also, if you look at NVIDIA, NVDA, let me, if I could type NVDA here, you can see NVIDIA's earnings are coming out on Wednesday, by the way, so we're going to see what happens there. So here's the bounce on NVIDIA. Okay, this is the push down this morning on the 30-minute time frame. NVIDIA had this big buy divergence here, and we caught the long off that, and then once the 2 o'clock time, the 30s reversed to sell. You can see, but here the 15s reversed to sell right after the opening. We caught this great short into the negative MACDs here. NVIDIA above 188.80, got up as high as 189. You can see the drop of about 260. And then what you look to do, you're in what's called a sell disconnect. The 15s are negative, indicator 4, but the 60-minute time frame is still in negative here. Okay, the 30s reversed to buy. We're still on buy mode. You short the first bounce on the look at this 12:15. The whole world was a short at 12:15. The whole world. Okay, let's look at the IWMs again. Another great one, really leading the pack here. The 15s. You push up here again. Look at this. You push up here right after the opening here. Okay, you can see the the push up right here. The 15s reverse to sell. It correlates with the 30 and the 60. You short the first bounce on the 15. There it is. 215, 1215, 1230, 236.97. IWMs dropped about 5. Never looked back. Unbelievable short there. Let's look at Apple. Beautiful patterns on Apple. Reversing the sell on the 60-minute. You can see the negative MACD, blue over yellow. The ADXs are rising. Look at this monster bear flag. Again, 12:15. You don't think times matter? I watch these times when patterns set up. 269.52. Apple, absolutely kabooshed there. You can see the drop there of about $3 to $4 right there. Again, great pattern. And again, if you look at Apple, there were a lot of what's called double red shorts here, which means that the 5-minute time frame reverses to sell. It correlates with the 15, 30, and 60, and then you short the first bounce on the 5-minute time frame. Going back to this 5-minute time frame, let me show you the pattern that I think was one of the greatest patterns of the day, is when the spiders reverse the sell on the 30-minute time frame at 1 o'clock. And what do you look to do? You short the first bounce right here. Boom, 150. S&Ps were trading 67.36. This is a monster short. This is a set pattern. You can see the 30 reverses to sell. Indicator 4 reverses the sell. It correlates with the 15 and the 60. What is the strategy? You look to short the first bounce right in on the 5-minute time frame. S&P futures, you can see the drop here. Spider 669.80 and 669.91. You can see the drop of almost 50 points on the S&P futures. So what I'm showing you here today is what a wild day it was here. Even at the end of the day, the S&P futures just pushed up to the 01 level. The 15-minute time frames pushed up here, and they just dropped 7 or 8 points. NASDAQ just dropped about 30, 40 points here. The patterns work. The patterns are there. You have to determine if you're going to be a scalp trader or a pattern trader, or you could be a combination of both, which I'll get into in the third segment here. But so with that being said, it was a phenomenal day. Great patterns, like I showed you, in gold. Great patterns in Bitcoin. Great patterns on the underlying ETFs. Microsoft, Apple, Nvidia, Coinbase, you name it. The Russell, all the ETFs. Palantir, another great one. Palantir, again, look at what happened here. Palantir reverses to sell. Okay, you can see Palantir is negative, and then when Palantir reversed to sell right after the opening, you can see we actually caught this short in Palantir after the push down right here. We actually caught this short on Palantir. And then when the 15 reverses to sell, you short the first bounce on the 15, 173 and change. Palantir absolutely got slaughtered after that. Never really looked back, and that was that again. So again, look at the time period: 12, 15. The whole world was a short at 12, between 12 and 12:30. So we saw, like I said, the great patterns in the index futures, great patterns on gold, great patterns on Coinbase, Bitcoin. Again, you're looking at the reverse ETFs like the SQQQs and the SDSs really help also confirm the move. So that's something to really, really pay attention to as well. All right, when I get back, I'll tell you what I expect for tomorrow. Okay, so for tomorrow, looks like we're going to be get another push up here. These oversold conditions on the 30 and the 60-minute time frame should factor the wearing off the oversold conditions probably between 10:30 and 12:30 time period, and then between 12 and 2, you got these negative MACDs, the 30s reverse to sell. Even if you do get a push up, you're going to have nothing but sell divergences here off the 30-minute time frames if they get to an overbought condition. I do think that with the 15s getting overbought here towards the close, because the S&Ps rallied about 35, 40 points at the end of the day. I do think that once you get coming into tomorrow, if we do get a push up, these 15-minute time frames getting overbought into the negative MACD are going to act like a roadblock and then push down. And then once the 30-minute time frame set up, you can see here on the spiders, I'm expecting the 30-minute time frames to, you can see the 30s here, and here's the 60s. We'll do the 30 and 60s. I'm expecting any overbought condition getting into a negative MACD here, 668. So we're about, S&Ps would have to run about 25, 30 points, 30 handles on the S&P, just to even get the 30 to reverse to buy. But even if you did that, you still have negative MACDs here. And if they do make new highs, these MACDs are not going to confirm. So again, I'd be looking for shorts there as well. So for tomorrow, like I said, if we do get any type of push down, all right, the deep oversold conditions should act as a shock absorber. And then, like I said, if you do get any push up here, I'd be looking for shorts here overall. So the today's low, 66.58.50 on the S&Ps. They ran about 40, 42, 43 at the end of the day. And then basically what you need to focus on is, let's see if these 15, 30, and 60-minute time frames can set up for shorts, okay? Market, before I show you this, I wanted to show you one last thing. Remember last week, I was explaining to you that this pattern right here was a bearish pattern, bear flag. You were getting overbought into the negative MACDs, S&P 6,900, Kaboosh, look at it drop, 242 points. So again, this pattern, it filled a gap here, but there's a lot more gaps to go on the downside. But we'll see what happens here. But that was a very bearish pattern. Coming into tomorrow, the dailies are going to reverse to sell. So any rallies with these negative MACDs are going to be looking for shorts here. But overall, like I said, the main important thing for tomorrow, if we do get any push up tomorrow on any overbought conditions on the 15 and 30-minute time frames, I would look to say let them have them. All right, when I get back, I want to talk to you about the 4 principles that you need to learn about trading. Number 1, you need to learn whether you're trading a pattern or a scalp. Very important. You can scalp trade, you can pattern trade, like the gold trade, beautiful pattern trade. The 150 short on the S&Ps was a pattern trade. but there's also a lot of scalp trading in intraday. I mean, when you say scalp trading, sometimes these indexes can move 3 to 10 points like that. NASDAQ can move 5 to 30, 40, 50 like that. Today, when they were pushing up to new highs, and I'm jumping up and down like a baboon saying, look at this negative MACDs on the 30 and 60-minute time frames. Where are they going? You're pushing up into these negative MACDs on the 60 and on the 30. Well, that's a pattern, okay? Now, did I expect them to drop 250 points? Nope. Did I expect them to drop 40 to 80? Yes. But it's still a pattern. So you need to identify whether it's a pattern trade or a scalp trade, number one. Like today when gold reversed to sell on the 15, the GLDs, I knew that the bounce on the 1 o'clock time period on the 15 and 30, gold got absolutely kabooshed off that pattern. Overbought into the negative MACDs on the 60-minute time frame. That's a set pattern. You're not scalping gold for 1 to 2 points. Second, how many contracts do you want to trade? Are you trading 5 big ones, 10 micros, 20 micros, 30 micros, 40 micros, 10 big ones, whatever? You got to determine how many contracts you want to trade on a pattern and how many contracts you want to trade on a scalp. Absolutely very critical to get that embedded in your head. Number 3, if I give a range, how are you going to execute in that range? Is it going to be, if you're doing 10 contracts, is it going to be 1, 1, 4, 4, buying 1, buying 1, buying 4, buying 4? Now listen, you can put 10 people in a row and all 10 people are going to have a different way of entering that scale in based upon that range. So what you really need to focus on overall, okay, is to understand how are you going to scale into that. Just keep practicing. Depending on the volatility, you may want to go wide. If I do a $6, a $7, or $8 range on gold, maybe do every 2 points. So if I call a range, look to short gold 44 up to 51, 52, maybe you go 44 and a half, you go 46 and a half, and maybe you go 48 and a half, maybe you go 115. If you're doing 20, maybe you go 1, that's 7, that's 2, 5, 7, maybe you do another 5 or 8 or 9 or 10 or 13 per se. So there's no way, there's no scientific formula in scaling. You have to be comfortable, but again, number 2, how many contracts do you need to trade? Okay. Number 3, okay, is how are you going to scale in? What is it? Like I said, is it going to go every 1.5, every 2 points, whether it's NASDAQ? I go every 10 points. If it's S&Ps, every 1.5, every 2, depending on volatility. Number four, which I just went over. How are you going to, in that range, are you going to go every 1.5, every 2 points, every 2.5 points, okay, on your scaling in methodology? So if I call an $8 range in gold because gold's volatile, and I say look to buy gold, I don't know, 04.5 to 12.5 range, and you start buying 11s, and then maybe 08.5s, or maybe 06s, and then maybe 04s or whatever. Okay, that's again something that you need to figure out. So number 1. Is it a pattern trade or is it a scalp trade? How many contracts? Number 2, what is the range that you're gonna, are you going to scale in? How are you gonna do it? Are you gonna go 1, 1, 4, 4 if it's 10? Are you different methodologies in scaling in, again, based upon the volatility? And then number 4, what is the width of the range that you're gonna be scaling into? So that's really important. So I'll help people throughout I will help anybody with this, and this is really super important, especially during significant volatility. You should probably widen your entries on your positions, long and or short. All right, with that being said, thank you for joining me today on The Bull, the Bear, and the Ugly. Please hit the subscribe button. Please leave a comment. Also, please join my community of traders from all around the world here at sktrading.live. If you'd like to follow me on Instagram, or any of the social medias at official Stephen Kalayjian on Instagram, TikTok, and also X. Also, if you'd like to reach out to me, you can reach me on my cell phone, 914-500-7484. Also, tonight through Thursday, I'll be hosting with my Funded Futures from 8 to 10 p.m. the Asian session. We have a lot of fun between gold, silver, index futures, so it should be fun. So we'll see what happens. Have a great night, everybody. Again, if you'd like to reach out to me, my cell phone number is 914-500-7484. With that being said, God bless you, and God bless the United States of America. Good night, everybody.
Thanks for tuning in to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.